Hey everyone, this is Marcus with your not so weekly tax tip. All right, so today I wanted to talk about being proactive in regards to taxes. And I preach this all the time, but unless Congress takes action, a number of temporary tax laws are going to expire at the end of 2025. This means that you have this year and next to take advantage of the current rules. Now, that doesn't mean that Congress won't extend the current tax laws, but why even take the chance? Take advantage now before changes occur. So here are some of the larger changes to consider. Number one, tax rates will go up with very different income brackets. So most taxpayers will be subject to higher tax rates, with the top rate moving from 37% to 39.5%. The income subject to these rates will also change dramatically. So now is the time to effectively manage tax brackets to avoid those higher rates. All right, number two, many more taxpayers will itemize deductions and have them subject to phase-out rules. Beginning in 2026, standard deductions may go down, and your deductions may be lowered if your income exceeds certain thresholds. Now, there is good news. The $10,000 state and local tax limitation, that will basically be removed, and currently excluded deductions are planned to be reintroduced. So that's some light there at the end of that tunnel. Okay, number three, more will be impacted by what's called the AMT, or the Alternative Minimum Tax. And that basically means that many more families will be subject to a potential second tax calculation, with the higher of the two tax rates being used to tax your income. Not good. Number four, the child tax credit will be reduced, as will the phase out for qualifying for the tax credit. And that basically means that most families with children will see a higher tax bill. All right, number five, there will be different capital gains tax rules. So planning the sale of assets is going to be more important than ever. And really, that's a pretty big or a tremendous tax planning opportunity to consider before the tax change. Number six, this is a good one. Exemptions will be reintroduced. Many people forgot about the little extra money they got for exemptions, but this is a good thing, because this tax reduction provision, it may take some of the sting out of the rollback of some of these temporary tax laws. And then last is small businesses may lose their 20% QBI deduction, which is the qualified business income deduction. And that basically means that small businesses and flow-through tax entities like S Corps, partnerships, sole proprietorships, they're going to lose a value tax break. Now, in my opinion, I think that Congress would probably reintroduce other tax incentives to combat the perceived lack of tax fairness when compared with other countries. So we'll have to just look out for that. Now, given these pending tax changes on the tax horizon, by the way, now is a good time to see if you can take advantage of the current tax laws, wait for it, before they are scheduled to change. So if you're not already a client, because my clients were already trying to be proactive, but if you're not a client and your advisor is not being proactive and talking to you about these upcoming changes to the tax code, then schedule a meeting with us and we'll be happy to see if we can help. All you got to do is click the link below. Until next time.